Welcome back to the channel, everybody. I am Mick Alphaning. Everything's looking good. Let's begin right here. We're always winning. This article is titled, Ripple Partner and JP Morgan join forces in the UAE. More activity. We've been covering this extensively as of late. More activity in the United Arab Emirates. Do I really need to say that there is a lot of money in the United Arab Emirates? Do you see how deep we're getting in that region? Do you see how deep we're getting? But let's read this little tidbit here. And once again, I say I do believe that a lot of currencies will be backed by different things. Gold, silver, oil, depending on who specializes in what. Why would you put yourself at a disadvantage? I mean, it's a possibility. It's a possibility. Especially with the tokenization of value, right? And the pegging of value to certain things. If you can peg your currency to, let's say your stable coin, if you can peg your stable coin to fiat, fictional money that does not backed by anything. If you could peg your stable coin to that, why would you not be able to peg your stable coin to oil? And let me tell you right now that the money that oil produces, muy linda mi gente. Understand that right now. So it's something that I just keep in mind. It's a possibility. It's not a guarantee, but I'm keeping an eye on that. That's why it's one of the reasons. Don't worry. Like, I love to make money off of oil, but I like to make money wherever I can make money, as long as it's legal and it's good. But I also keep my eye on oil because of that. I like to know the problems. Do they have problems that the distributed ledger technologies can solve? Do they need us for tokenization of whatever, the value of oil or traceability, payroll, whatever they need? I keep a close eye on that industry, right? The rest of the world is going to continue on. I know that the West has the green agenda, but the rest of the world is going to continue to do what they want. So, and they're not going to allow anyone to hinder them. So I keep a close eye on that. Just the same way I keep a close eye on the green agenda. I'm going to make money off of both. We're going to get money from the top and the bottom. So you want your green agenda? Sure, I'm going to make money off that. We're in deep with them. You want to do whatever with your oil? Sure, we're going to make money off that as well. All right, that's how you make money wherever you can. We have to go out there and get it. So it's like Marky Mark said. Every comment section is Marky Mark or Love Life 22 says, let's get it. Exactly. We're going to get it. All right. Let's read this little tidbit here. Thank you once again for everybody being here. It says, a recently published press release states that Al Fardan Exchange LLC, which is one of the partners of Ripple Labs fintech giant, has teamed up with another behemoth. Though it is from the conventional financial industry, banking juggernaut JP Morgan. We're familiar. We're very familiar with JP Morgan, and they're very familiar with us as well. Al Fardan Exchange is a major firm for money transfer and currency exchange in the United Arab Emirates. You know, it's funny. I just filmed a members only video. You're going to want to watch it. Trust me on this. I found something good, right? I think it's very potent, but I'll put that one out. It's either going to be dropped either tonight or tomorrow morning, one of the two, whenever I can finish editing. But when they just said currency exchange, muy linda mi gente. Trust me on this. There's a problem. Currency exchange in the UAE, and we can solve it. Currency exchange in the UAE and is licensed and regulated by the country's central bank. The two companies will together offer their customers value transfers conducted in a record short period. Wow. That's all I can say is wow. In a record short period of time. What they just said is validating a lot of what you're probably going to hear. They just confirmed something for me. I'm going to leave it at that. But if it goes where I think it's going to go, holy smoke. Like I said, that members only video is going to drop. Remember this phrase right here when you watch it. All right. It says the two companies will together. We don't need JP Morgan, by the way. We don't really need them. They're like gatekeepers. Sometimes you have to deal with these people just to have something instituted. They're just gatekeepers. They're not significant. In my humble opinion, they're not. We can do it without them if we really want to. But it says the two companies will together offer their customers value transfers conducted in a record short period of time. Remember that when you watch this members only video and then absorb the other information I'm going to give you. It's going to blow your mind. I'm telling you now. I don't say this often, but keep that in mind. Let's continue on here. Right now, I'm getting fired up. We've already won. In my humble opinion, it's going to take some time. We've already won. It's a wrap. Ripple partner teams up with JP Morgan. The partnership between Al Fardan Exchange and the renowned global bank will enable customers to transact in major global fiat currencies and smaller ones too. Shouldn't that be smaller ones as well? Oh man, shouldn't be doing that with the grammar, right? I'm not one to really speak. The USD, GBP, and EUR and South African Rand to cut a long list very short. Aside from that, customers in the UAE will be able to process faster and more reliable financial transfers. Per the chief executive of Al Fardan Exchange, Hassan Fardan Al Fardan, the company's collaboration with the global banking giant JP Morgan has now been recognized. So pretty much JP Morgan is in deep with Ripple, pretty much. That's all it is. It's like participating with us by way of proxy. That's pretty much what's going on here. Has now been recognized as the advancement of the whole nation in the AML/CFT sphere and is now attracting major global players. Woo! This is big. Is now attracting major global players from the financial industry to return to the UAE market. This is about to get big. And let me say this. This is going to grow far beyond this in my humble estimations. I'll leave it at that. Like I said, I cover a lot in that members only video. I'll leave it at that. This is going to be big. We need to keep an eye on this. I need to screenshot this and really keep it in my file and put it, like an update on my calendar. I have to remember to do that sometime. Put an update on my calendar, maybe about a month. A month is a little too quick. You know what? I'll put a month update on my calendar and I'll put a 2-month update, right? And I'll have it recurring. So that way we can look at and get an update on Al Fardan Exchange and what's going on with this. They're not going to be the only ones doing this. No, I see this happening in a widespread fashion. Believe me, there is a huge problem going on and you can't find it in the data. Yeah, they don't put it in there. They leave it out. Let's continue on here. All right. Before I, if you want more, you have to watch that members only video. Potent. Oh yeah. Let's go here to this article. It's titled Ripple Active Addresses Skyrocket by 190%. This was in, if I'm correct, I read another article about this. Let me scroll down here. I think this happened in 24 hours. Let's see if this article corroborates that time frame. It says XRP price reversed the minor gains charted on Monday, falling by 0.12% as the week began inconsequential. Some on-chain developments around XRP kept Ripple traders and investors on edge. Not really, in my humble opinion. XRP daily active addresses skyrocket. Okay, we're here now. Let's see if they say it was in 24 hours, because that would be significant. XRP trade volume saw a steady rise, showing that retailers were up to something. While there wasn't a notable retail euphoria that could aid price action, the volume rise could lead to higher retail-induced volatility for XRP price. Alongside trade volumes, XRP daily active addresses noted a significant spike, appreciating by almost 200%. Why do you think that is? XRP DAA was making higher highs since November 30th. I'm trying to find, it doesn't say in this article if it was in 24 hours, but I read another article and it said that this spike happened in the last 24 hours. Then the question is why? There's always a why. What happened that made these addresses explode like that. You saw the article we just read, right? Now, I'll say this. I think there's a lot going on behind the scenes. I have to say, I think. I really want to say I know. I think there's a lot going on behind the scenes. And there's a lot of aspects of what XRP, I'll say XRP, XLM, Algorand, the bank coins are capable of doing that is not being spoken about. There's a lot of possibilities. And as I just said, I gave you a little bit. There's certain things going on, problems that need to be solved, that they're not releasing in the data. The question is why? Then there's so much. I may have to actually release a second members only video on this particular topic because there's something I want to say. But man, these central banks, let me just say this. These central banks are shady. They're very shady. And there's a lot of, I'll just say, questionable activity going on. But when it comes to the bank coins, it actually is a good thing because of the things that the banks have caused, only the bank coins have the solution, which could theoretically lead to an explosion in price because of certain amounts of value that could be moved. Value that you're not going to find in the data. Let's go here. Let's move on to another article. All right. So this article is titled, "What is XRP2?" XRP2? What? XRP2? Nah, I know where your mind went as soon as you hear that same thing I was saying. I was like, what? XRP2? So Ripple CTO David Schwartz has to swoop in again to drop facts on the people and calm them down, right? When the people just read a headline, they lose it, you know. But let's read this article here. It says, after one of David Schwartz's followers found a mention of XRP2, it's a researcher. The researchers, you can't get anything past us. I'm telling you now, you can't. We're going to find something. And if it's something questionable, we're going to ask questions, right? So this was a researcher who found this, apparently one of us, found a mention of XRP2 in Ripple Labs official documents. Oh, somebody was doing their homework. Good job. Ripple CTO took to Twitter to explain what it is. According to Schwartz, XRP2 is a separate legal entity controlled by Ripple Labs and needed to conduct separate specific activities. In the next tweet, he separately clarified that XRP2 is not a cryptocurrency. It's not a cryptocurrency, okay? I remember last year there were some crazy rumors and such. I'm not even going to address it, but this is not a cryptocurrency. It is an LLC, all right? All right. It says, which appears to have been previously named XRP Fund 2. So they just shortened it a little bit. So it could sound a little bit strange to an unwitting person who just reads XRP2 and you're like, what? As stated in the original document, XRP2 is involved in the sale of cryptocurrencies to third parties. Thus, this company was selling XRP in exchange for fiat money. There you have it. There you go. So now we're going to move on to this here. This was tweeted out by Stellar. Stellar. Sneaky Stellar. Sneaky. If you listen, you know what's very strange? Watch that last video that I put out, right? If you're into information about XLM and Stellar, if you follow that information, watch that last video that I made, right? And the part where I'm talking about Stellar is sneaky. There was a company that they put on their list of chosen companies, and it was at the bottom of the list. And I said to myself, wait a minute, this company can grow. And in the region that they're in, if this company were to grow, it would be major. If it grows, there's no guarantees. But just based on those particular possibilities, how do you put it at the bottom of the list? It seems sneaky to me because it seems like they don't want an eye on whatever could cause FOMO. That's why I say that sometimes. Sneaky. It's like Stellar doesn't want any FOMO. They don't want too bright of a light shined on them. But if you look at that particular region, the MENA region, United Arab Emirates, all the countries over there, you look how deep Ripple is getting in there. Look how deep Stellar is getting in there. Look how deep Hedera took a picture with all the top people in the United Arab Emirates. It's on their Twitter. Why are they getting in deep there now? Now, it's a reason for that. So that's why I say Stellar sneaky. This is a similar thing here. They point this way while they're going this way, right? This is a company that is all about moving value. But they point this way when they're telling you, like, we want to help the world. And, and of course, maybe they were going to do that because they're carbon neutral, carbon negative. It's all very good. Sure. But you're a company about moving value. Let's not forget that. So when they're talking about things like this here, embracing sustainable innovation, understanding the environmental impacts of blockchain technology. Listen, when businesses speak like this, it's all a ploy to get in your pockets. They're going to be tracking who's using how much carbon. There's already going on in the rest of the world. That's a lot of money going into the traceability sector. Tracing how much carbon people are using. If you're using too much carbon as a company and they're going to do it on an individual level, that's also happening in certain countries, you're going to be fined. That's a lot of fine money in value going across the blockchain at some point because of that, because they are the ones that have the greatest capability of traceability and having it being transparent, right? Being transparent is going to help companies avoid a lot of legal issues. So they're going to use that. That's two. So, I mean, when they're doing things like that and they're talking in a certain way, that's why I always say sneaky. They're doing a good job. Don't get me wrong. They're going to move a ton of value. I love that aspect. But you have to sort of, with Stellar in particular, you have to really, really peel the veil off of what's going on. So anyway, yeah, if you haven't watched that last video I put out, it was a late release. I've been so busy with so many projects lately. And then it's a combination of how many different projects I'm working on at this time, and also YouTube issues. There's been some YouTube issues, so that has slowed things down as well. I don't know why, and hopefully they're going to fix things very soon. But it was a late release. So if you haven't gotten a chance because it was a late release, give that video a watch. I believe it was very good. Now, let's read this little tidbit here. It says blockchain technology has scaled rapidly in the last several years and is projected to expand to an even larger market across industries and countries. It is shaking up the global financial system, but environmental concerns risk stifling innovation. Potential regulatory action by governments concerned with energy impact of blockchain activity is another reason to focus on sustainability. This is also another way where there will literally, we've covered this many times, there will literally be no way once fair regulations are inputted that they can stop the bank coins. Energy is one of the ways that they have been trying to stop the whole of crypto, but not us. We just need the fair regulations. Then we're going to take off like a rocket, in my humble opinion. It says, in response, blockchain participants are considering environmental, social, governance, ESG issues in their efforts to innovate. For example, Ethereum, the blockchain platform, and the second largest cryptocurrency by market capitalization, Ether is transition. Okay, so we know all of that stuff here. Let's scroll down. Policy. Look how many countries are involved. 70 plus countries covering 76% of global emissions have set net zero targets. They're all in on it together. Is it safe to say that if Stellar has sat down with some of the most powerful governments in the world, has been tested by some of the most powerful central banks in the world? This is factual information. You can look it up for yourself, but most of the Stellar community already knows that. But if they're beloved by them, wouldn't there be a trickle-down effect? That more and more of these lesser entities or smaller entities will be brought in. Smaller countries that are influenced by the larger countries, whether they're BRICS nations or the West, will also be brought in. I think that's logical. I think we're seeing that right now. Just trickles of it. 70 plus countries. It says investors, 35% of assets under management have committed to 2030 emissions targets. So they're pressuring the people. Customers, 21% of the largest 2,000 public companies have committed to net zero targets. 21%. This is why Stellar and all these companies are getting in deep with this particular agenda. They want to be the ones who provide traceability. They want to be the ones who are going to when it comes to taxing and moving that tax of value, traceability, wallets. And what does it do to that price if they're deeply involved? There's no guarantees, of course, but they're definitely going for it. This is why they're always involved. This is why they retweeted this, because they want to be involved. This is why they're always shouting about, oh, we're green and we're all for the environment. This is why, one of the reasons why. And yes, it is beneficial, but the value that could be moved definitely would affect that price. Of course, it will take time. Everything happens in degrees, right? So now let's continue on here. I hope I'm being, I don't know if I'm being eloquent or not in this video, but I'm just flowing today. I'm just flowing, everyone. So now let's go down here. Here's an article titled, "Buying Power in Crypto Market Remains High Despite Price Drops." Let's read this little tidbit here. This is from Coin Edition. They're doing a great job over there. Check them out. It says, the global crypto market cap has fallen over the last 24 hours, according to CoinMarketCap. At press time, the total stands at $835 billion after it dropped 1.75% yesterday. This drop in the total crypto market cap is a result of the price drops seen across the board, especially when looking at the top 10 cryptos by market cap. Meanwhile, despite crypto prices continuing to drop, the blockchain analysis firm sentiment shows that the buying power in the crypto market remains high, higher than that seen during the 2021 bull run. Woo, what? Something's coming. Something is coming. Let me read that again. Despite crypto, this is reputable. Sentiment, this is reputable. Despite crypto prices continuing to drop, the blockchain analysis firm Sentiment shows that the buying power in the crypto market remains higher than that seen during the 2021 bull run. Let that sink in for a moment. Let's continue on here. An article here that says Goldman Sachs plans to invest tens of millions of dollars in crypto companies. I told you. Listen, they utilized that whole FTX collapse and all of this drama, and they caused a lot of it. All the banks and governments caused a lot of it so that they can come in at a low and take everything over. Let's read this little tidbit here. According to a Tuesday report published by Reuters, Goldman Sachs, one of the biggest American banks, plans to spend a significant amount of money on struggling crypto companies. It's a takeover, potentially capitalizing on the crypto crash. As the cryptocurrency faces a major as cryptocurrencies face major crises, multiple crises of confidence following the FTX downfall. Like, I don't understand that. They keep associating everyone with FTX, and we have nothing to do with FTX at all. We have no association with them. We have no business with them. The Bankcoin family is completely safe and separate from that. But do you see this, how they're doing that? They're trying to conflate everything together. So it's all part of their plan. So they can come in and buy everything up. They can chase off all the retail and all the newcomers that were coming in. We were getting a lot of newcomers, a lot. And they're chasing them off so that they can buy everything up and take it over, and they can reap the benefits. This always happens with technology. The legacy system finds a way to shake the people out, and they come in and they take over. So we read a lot of articles about the banks buying up crypto and waiting to get in and take over. We know that. We read a lot of articles recently about institutions on the side with a lot of money on the side waiting to just jump in and just buy everything up. We read that also. And now here you have Goldman Sachs just coming right out and telling you we're about to buy a whole bunch of companies. We're about to just take over a whole swath of crypto. Right? As the crypto, it says, legacy financial players see an opportunity. My goodness. We've been telling people this for a long time and telling people that opportunity is there when the prices go down. You can't really say that. People will get mad at you. Well, the prices are down. It's like that's when the money is made. When the prices are down and you get in at a low, And then when there's a bull market or the economies are better and then everything goes up, you ride that wave up. Now you're sitting on a whole lot of money. The institutions are the only ones that take that absolutely seriously. They get in at a low and they see the opportunity. It's the same every time. Says so this was said by Matthew McDermott, the head of digital assets at Goldman. So it's coming right from them. They literally said just now, legacy financial players see an opportunity. Meanwhile, all the retail, not all, but massive amounts, trust me, I know, I see, and people tell me all the time, massive amounts of retail are gone. They're done. They've left crypto forever. Only for the institutions to come in now, and you have Goldman saying, we see an opportunity. They're about to buy everything that they can. Unbelievable. Unbelievable. That also tells you crypto has a bright future. Like, of course, the bank coins are dominating. We continue to expand. We continue to grow. We continue to sign new banks, new partnerships. This is all continuing, and it's easily researched. Easily researched, right? So now let's continue on to another article here. U.S. banks warn of recession risk, inflation hurting consumers. The biggest U.S. banks are bracing for a worsening economy. Didn't I say that? Haven't I been saying the economy is going to get worse? Meanwhile, all these media writers have been telling everyone, no, it's going to get better. No, we're not in a recession. Agreeing with the politicians. All the smart money knows the economy is about to get worse. They haven't done enough to bring down inflation. Then on top of that, dealing with inflation and a rogue Fed, apparently they don't just flip-flop so much, you don't know what they're going to do. Then you're dealing with possible de-dollarization of the rest of the world. But I've been saying it for a long time. We're in deceleration. It's not a recession. We're in deceleration. The problem now is to keep everyone out of a depression. That's the issue at hand. Let me read it again, okay? So you have the biggest U.S. bank. So it's not just Alphanim saying this, you know. And I look. From time to time, I do like to have a good time. I have to be myself. But when I speak very seriously. I've done so much research. It would blow most people's minds. It's not a joke. This is what I do. So when I say something like that, like when I said what I said about the real estate market, now look at what's happening. Look at what's been happening. I was talking about that in February, March. And now I'm saying it again. I'm saying, hey, protect your value at all costs. I've been talking a lot about protecting value, have I not? Let me read it again. The biggest U.S. banks are bracing. They're preparing. I'm telling all the retailers to prepare. Nobody cares. People don't be caring. But the banks are preparing. They're protecting their value at all costs. That's another thing. I've been posting in the members only section. What have I been talking about? What have the banks been buying en masse to protect themselves and their value? What is it that you can buy that the value of it barely budges? The most safe protection. But I'm just showing that they're taking precautions to protect themselves. That's what I'm trying to say. Something is coming. The biggest U.S. banks are bracing for a worsening economy next year as inflation threatens consumer demand, according to executives Tuesday. JP Morgan Chase and Company CEO Jamie Dimon, so this is reputable, told CNBC that consumers and companies are currently in good shape. That may not last longer. They're not in good shape. What are they talking about? How many mass layoffs do we have to cover here? Amazon is about to lay off 10,000 people. We've been covering mass layoffs for the last 2 to 3 months. 2 to 3. They're hanging the people out to dry. They're not letting the people know what's going on. They want the people to continue to just operate like everything is normal. Meanwhile, they're preparing. Says that may not last much longer as the economy slows down. There's going to be so many more mass layoffs. I'm telling you, stay aware. Be careful. As the economy slows down and inflation erodes consumer spending power. That's another thing. They don't clarify when they're talking about inflation that even though they're claiming it has plateaued, it is not going down. In fact, I have been of the firm belief it's going to go up more. If they ever become dovish, that inflation is going higher. You have to continue with the same pace or maybe go to 100 basis points to bring it down like you're supposed to. But the Fed, in my humble opinion, the Fed just doesn't want to be the bad guy. I said that before all this political season kicked off. They don't want to be the bad guy. There's a lot of political connections, and certain entities don't want to be viewed badly by the people. So the Fed has to sort of walk lightly. They're playing a political game, but it's injurious to everyone out there. This is what I see going on. So where do we leave off here? My goodness, when I get a little bit excited or passionate about something, I mean, I have to give it to you the way that it's coming out. I can't be anything other than myself. At this point in life, I'm very comfortable being myself, right? So I just have to deliver it to you how it's coming out. Quote, those things might very well derail the economy and cause this mild to hard recession. They're not even talking soft landing. I've read articles recently. They're still talking about a soft landing. Can you believe that? A soft landing? This was maybe last week. I was reading maybe 2 or 3 different articles about a soft landing. I've been saying the whole time, there is no soft landing. There is no soft landing. Rip the Band-Aid off already. Let's get it over with, right? But here you have the banks, Jamie Dimon of JP Morgan Chase, the CEO, telling you that this might cause a mild to hard recession. Hard recession? That's a depression, sir. That's a depression, sir. No matter how short or long, there's no hard recession. That's a depression, sir. Everyone's losing their jobs, mass layoffs, high inflation. That's a depression, sir. There's, my goodness. It says hard recession that people are worried about. Quote. So they're already worried about it. I told you, man. I told you. We make good calls on this channel. I'm telling you. The U.S. Central Bank last month raised rates by 75 basis points. We know that. Okay, so now let's go to Goldman Sachs now. Now you're hearing it from Goldman Sachs. Well, but first, let's read this one here by Bank of America. Sorry about that. I didn't see that. Bank of America CEO Brian Moynihan told investors at Goldman Sachs financial conference that Bank of America's research shows negative growth. That's different than what a lot of other entities have been saying, isn't it? Negative growth. In the first part of 2023, let me tell you something. I think a lot of numbers were skewed for this last little quarter here. I really do. I believe that 100%. It don't take a lot to skew numbers and to make data so vague and fragmented that it's hard to make heads or tails of whatever is going on, right? Just like what I was saying about the debt earlier. So we look at a lot of financial data from banks. We look at a lot of financial data over the year from non-banking financial institutions, right? And it would give you a certain view when you're looking at that data. However, what they don't say, and what we just learned recently, we knew this, but we had it confirmed. That's in the members only video I'm about to drop. There's something that they don't put on there. If they put it on there, it would change everything. It would change everything. So that is what I use to confirm and back up my thought right now that data can be skewed. There can be things left out. There can be information left out. They choose what they put in there. And that can change everything. So now, negative growth in the first part of 2023, but the contraction will be mild. Right. JP Morgan literally a couple of sentences before this one said it could be mild to hard. That's a depression. Quote, economic growth is slowing. Goldman Sachs chief executive David Solomon. Now you have 3 CEOs telling you the same thing. Economic growth is slowing. Goldman Sachs chief executive David Solomon said, quote, when I talk to our clients, they sound extremely cautious. They're smart money. I'm telling the people, smart money is being cautious and protecting their value. In banking, the job market remains surprisingly tight, and competition for talent is as tough as ever. I'm not concerned with that at all. But there you have it. That was a potent article, in my humble opinion. So now, a little bit of gold news. We're going to end up with gold because gold makes me happy. It does. I just love saying that, though. But let's read this article here. This is from sharpspixley.com, and it's titled, Laurie Williams. Bro, oh my goodness. Gold rising to $2,250. Bitcoin falling to 5,000. I don't know if I agree with that, but we'll see. I'm not a holder of Bitcoin. I'm not a researcher of Bitcoin, so I wouldn't know. The gold aspect is what I'm concentrating on here. It says both next year. Gold, oh my goodness, if it hits that price, woo. Let's read this little tidbit here. It says, we have over time been pretty positive about the prospects for the gold price. I am as well. Currently wavering just short of the $1,800 mark, which I think recently we covered that it actually hit the $1,800 mark, but have tended to be negative on cryptocurrencies. In this case, it is analysis from Eric Robertson, global head of research at Standard Chartered Bank, so it's reputable. He reckons that markets are underestimating a number of what he terms surprise scenarios for 2023, the most significant of which is a continuing dive in cryptocurrencies, with Bitcoin BTC, the leading cryptocurrency, falling to perhaps as low as $5,000. We'll see if that happens. Let's scroll down here and get to the gold news. I want to hear about gold. Okay, as for gold, here we go. Robertson's thoughts are not nearly so extreme. Why would it be? Gold is looking good. And if the dollar weakens, gold is going to skyrocket. But we'll see what happens. Are not nearly so extreme and are much closer to our own likely pricing scenario. As cryptos collapse, they continue to talk about these things like that. Robertson feels that investors who had viewed Bitcoin and other cryptocurrencies as digital gold would rapidly switch their investments into the real thing. Haven't I been talking about that for quite some time? I mean, listen. It's all about protecting your value. I suppose if you believe in those things, you would still hold, because once that does hit a bottom, people are going to buy it like crazy, and then boom, it's going to shoot up. You're going to have a price explosion. And a lot of people are waiting for that. They've been telling you for months, oh, we're waiting for Bitcoin to hit 10,000, 7,000, 5,000. Yeah, they're going to buy everything in sight, and then that price is going to go up. So some people who really, really believe in Bitcoin will continue to hold. But it's not about Bitcoin. Anybody who has money anywhere, making any type of value anywhere, or has cash on the side or whatever on the side and wants to protect their value, they might look at gold, right? But let's continue on here. So it says, would rapidly switch their investments into the real thing and thereby drive the gold price upwards to around $2,250. We got in at a good low, by the way. Good low. A new record high for the yellow metal. New record high could hit. This is a level which we feel is a more realistic price target for next year in any case, even without the boost from the money that might otherwise have gone into the crypto sector. So, we'll see what happens. But yeah, I'm always bullish on gold. I know what the future holds. I know how it moves in relation to huge capital flows into it. Also, when the dollar is weakened, then gold increases. Everything gets stronger when the dollar is weak. So, but now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.